Welcome to the Daily Update Podcast, where I'll go over the action in the market for Thursday, June 26th, and we'll see how things look for Friday, June 27th. The S&P 500 delivered a solid gain, climbing 0.8% to close just under 1 point shy of its all-time intraday high of 61.4743. This was set back on February 19th. Meanwhile, the NASDAQ 100 powered on to a new all-time high for the second consecutive day, showcasing the strength in tech and growth. This positive momentum signals a broader recovery after the market's 21% drop from March to April, with the S&P 500 now approaching its February peak after a remarkable 42 or 43% round trip. However, there's a note of caution. Trading volume remains below average, creating a negative divergence as the market nears these historic highs with reduced participation. This could signal hesitation among investors, so it's something to watch closely. Breaking down the technicals, the S&P 500 opened above its R1 pivot point at 6107 and held above 6100 for the entire day, which last week had previously acted as resistance. The index rose above R2, but faced no significant selling pressure, which is a bullish sign. Short-term technical indicators, including the Stochk RSI, Williams %R, and CCI charts, are flashing overbought conditions, but remain positive in this bullish backdrop. Intermediate-term indicators are also improving, with the S&P 500 trading in the +3 standard deviation channel. Volume-based indicators, such as the advanced decline line, are outpacing price-based ones even on below-average volume, suggesting there could be room for further gains. The ADX is rising and starting to generate a signal of a strengthening trend, though it's not confirmed yet by climbing back above 20. Sector performance was led in part by megacaps and semiconductors, which powered the S&P 500 higher. Small and mid-cap stocks showed strength, but may be continuing to struggle with consistent follow-through. Tech and growth stocks outperformed value stocks on Thursday, continuing their dominance in this rally. On the economic front, the data produced a mixed bag. First quarter GDP was revised lower to a negative 0.5% after it had been at a negative 0.2%, with the GDP deflator rising to 3.8% from 3.7%. The market largely shrugged this off as backward-looking data. Durable goods orders, however, surprised to the upside, surging 16.4% month over month, well above the expected 6.6% climb. Jobless claims provided some reassurance, with initial claims dropping to 236,000 from the forecast of 247,000, though continuing claims continued to tick up, hinting at challenges in re-employment. Elsewhere, the trade deficit widened to minus $96.6 billion, and pending home sales rose 1.8%, beating expectations of a rise of 0.4%. Market sentiment remains positive but not overly exuberant, with the sentiment reading at 62, up from 59. The VIX is under 20 and trending lower, reflecting calmer conditions. Supporting the rally, the U.S. dollar weakened and the 10-year Treasury yield fell further to 4.25%. Looking ahead to Friday, June 27th, seasonally, historical data points to a slightly positive bias for this date, with July often becoming a stronger month, particularly for the NASDAQ and NASDAQ 100 in post-election years. However, several factors could influence Friday's session. Key economic reports are on deck, including personal income and spending, the core PCE inflation gauge, which is a critical metric of inflation, and consumer sentiment. These releases have the potential to move the markets, so investors will be watching them closely. Geopolitical risks also linger in the background, with ongoing concerns around issues such as Iran and Israel. While these aren't dominating market focus currently, they could prompt some weekend hedging. Additionally, Monday, June 30th marks the end of the month and quarter, which could lead to portfolio window dressing and heightened volatility. From a market dynamics perspective, the S&P 500's momentum suggests a new all-time high is within reach, but low trading volume and overbought indicators call for caution. For those tracking key levels, updated daily pivot points are posted on the YouTube community tab. In conclusion, Thursday's market action was positive, with the S&P 500 and NASDAQ 100 riding a developing trend across short and intermediate-term timeframes, fueled by mega caps and semiconductors. While economic data presented mixed signals, the market's resilience is clear. Critical reports due on Friday and potential geopolitical developments could determine whether the S&P finally breaks its previous all-time high. However, with low volume and short-term overbought conditions, investors should stay vigilant. I hope you found this podcast helpful. For more in-depth analysis and commentary, the full-length daily video update is available on YouTube and Rumble right when the market closes each day. To access the videos immediately after they are available, or to access the daily newsletter, please click on the links below.